Hello, ladies and gentlemen. I'm Joseph Novichko, Senior Trading Manager with GDM. Today's outlook, we start with majority of Asian shares that market joined their global peers to rise on Thursday, with, of course, leading China's Shanghai Composite Index clinching a new multi-year high. Volatility remains a key theme in the mainland, with the Shanghai Composite reversing a lackluster open to change up to 2%. Scaling a fresh 7-year high. In the previous session, the key stocks index gave up 1.3% as relief that the Asian economic giant had matched its own growth target that was offset by dismal readings on industrial activity. Meanwhile, Hong Kong's Hang Seng Index cut losses and ticked up 0.4% by mid-morning trade. Australia's S&P 200 index rebounded from yesterday's one-week closing low. Beyond, by rises offshore and as the economy added a surprisingly strong number of jobs in March. The country created 37.7 thousand jobs, above expectations from a 15,000 increase, with the rise made up of a 31.5 increase in full-time employment. That brought the unemployment rate down to 6.1%, below expectations of 6.3%. That, of course, led the Australian dollar up as high as 0.7770 against the US dollar, marking a more than 2-week high. Japan's Nikkei 225 index saw no direction in trading after breaching the psychological important 20K point level. Due to profit-taking and, of course, weak first quarter gross domestic product data from China released on Wednesday. The dollar was last down 0.23% against the yen at 119.90 yen. The European Central Bank has no plans to curb its money printing program, although it expects the Eurozone economic recovery to broaden and strengthen. ECB President Mario Draghi said he was surprised at speculation about exiting the program earlier, since it was only a month old. The ECB's asset buying program of 60 billion euros a month of new money, which the central bank has started last month, has a weakening effect on the euro. In the commodity sector, we're taking a look at gold. It is settled higher on Wednesday as the dollar paired gains after weaker than expected US economic data, although stronger European shares limited the upside. The dollar cut initial gains and was unchanged against a basket of currencies. Again, after data showed U.S. industrial output fell 0.6% in March. Gold's rebound on Wednesday was hoovered and capped by stronger European shares, hitting a 40-year high. At the moment, the yellow metal is traded $4 above the 1,200 level. U.S. oil closed at its highest level of the year on Wednesday after a lower than expected build of crude oil stocks in the United States. Crude inventories rose by 1.29 million barrels to 483.69 million barrels in the week to April 10. The U.S. Energy Information Administration said that on Wednesday, against, of course, a forecast of a 4.1 million barrels rise. In the calendar today, we're looking at housing starts, building permits continuing, and initial jobless claims for U.S. coming out 12:30. That's all for today. Thanks for being with us. See you next time. Bye-bye.